Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Today we're looking at the US airline sector and my guest is Amy Kong, Chief Investment Officer at Barrett Private Wealth. This week the International Air Transport Association, or IATA, held its annual general meeting. Its biggest pronouncement was the fact the industry has more than doubled its estimate for global airlines profits to $9.8 billion this year, as a surge in North America and Europe drives up ticket prices. Some 4.35 billion people are expected to travel in 2023. That's getting close to the 4.54 billion passengers who flew in 2019, before the pandemic. North America remains the standout in terms of the airline industry's financial performance. Consumer spending has remained solid despite cost of living pressures, and the demand for air travel remains robust. Air passenger demand in the region is forecast to exceed its pre-COVID level this year. But IATA warned that though the data and profit forecasts sound impressive, margins in the industry remain extremely thin.
It represents a net margin of about 1.2%, or in simple terms, about $2.25 per passenger, which is less than the price of a cup of coffee.
I'm joined now by Amy Kong from CI Barrett Private Wealth for her take on the US airline sector. Amy, thanks so much for joining us. I noticed there that IATA singled out North America. What is it about US airlines that are helping them be so profitable at this moment in time?
Hi, Ramzan. Thanks for having me. As we can clearly see, travel is in a boom state right now within the U.S. And so thinking about demand versus supply, clearly demand is really outpacing supply at this point, especially in the travel state. U.S. consumers are clearly shifting from buying goods to really focusing on missed experiences. And that obviously is a tailwind for airline profitability, at least in the short run. We're also seeing that capacity levels are still somewhat low. I think oil prices moderating is also a tailwind for the airline industry. And so in essence, when you think about, unit revenue for these airlines, it's obviously in a very positive state at the moment.
Looking at two sectors within the airline sector in the US, you have your budget carriers and you have your major carriers. What are the similarities and differences at the moment that you see that, are very interesting at the moment in terms of where they go?
Sure. At the moment, the major carriers are probably in a better light, considering that they have a little bit more exposure to international travel, which in our opinion could be that next leg of growth for the airline industry. When you think about just in general travel, for domestic travel versus international travel, domestic travel has now really reached back to 2019 levels, whereas in international, we're still seeing, depending on the country, levels that are 10 to 20% below pre-COVID levels. And so I think that is one difference, if you would, that I would highlight. Valuation wise, I think the low cost carriers are trading at a slight premium to the major carriers, but that's not anything to be too different in terms of a valuation gap. But we are seeing that the low cost carriers have slightly better profit margins, and so perhaps that explains why the valuation levels are slightly better.
So if you're a major carrier right now, is it right to say bigger is better?
I think for now, bigger could be better. And to my earlier comments, because the international piece has really not quite played out as much as the domestic piece, and we do expect international travel to continue this momentum, being a major carrier could have its benefits. Certainly, they have the wide body, airplanes. And so really comparing that to some of the low cost carriers, there could be better growth potential. And then within the major carriers, United right now is the one airline that has the most international exposure relative to American or Delta. And so if you really had to pick one, that could be a potential winner per se in the short run. But of course, the stock is up nicely this year. And so obviously that is perhaps baked into the price or expectations at the moment.
So I'm guessing from what you've just said there, you're not a huge fan of the airline sector at the moment. Is it the right time to start investing in airline stocks?
In general, we have shied away from airlines for a variety of reasons. To your comment, even though profits are likely to be positive this year, they are still experiencing very low margins. In fact, you're looking at 1 to 2% across the board, and even pre-COVID, it was not as attractive. I think during the pandemic, a lot of these airlines, whether it's low cost or even major, they have had to really damage their balance sheet because of the fact that nobody was flying. And so when you think about leverage ratios and as well as the dilution of shares outstanding, those metrics unfortunately have turned for the worse. Just take American as an example, their net debt to EBITDA ratios have gone from maybe 3.5 turns to as much as 6 turns at the end of 2022. And so that just gives you a little bit of context that unfortunately the balance sheet quality has deteriorated quite a bit. We're also a little bit keen on the fact that, yes, demand is coming back. Obviously, there's a big push towards travel post-COVID, but we do expect some of those trends to normalize. And we are starting to see that happening with regards to metrics that we're paying attention to, whether it's people traveling through airports. And just in general, I think that initial rush is starting to fade out a little bit. And so when you put all of these metrics and characteristics together, we are still shying away from the group.
Amy Kong from CI Barrett Private Wealth, many thanks for your time. And that is your roundup of the US airline sector. I'm Ramzan Karmali, and this is Reuters.